So is there really a big difference between one lender and another? And how do you choose the right lender and know that they're representing your best interest? And most importantly, what are some of the biggest mistakes that almost every home buyer will make when it comes to choosing a lender? Well, today we're going to take a deep dive into this topic and answer this question and more. And if you stick around to the end, I'll give you some super valuable tips that will save you time and exhaustion and frustration. So, like the video, leave comments, subscribe and share, and here we go. Choosing the right lender when you're in the middle of trying to buy a home is the single most important decision that you will make through the entire process, including choosing the right realtor. But is it really that difficult? Aren't all lenders created the same? And the answer is a hard no. Choosing the right lender will be the difference between you getting your home and not getting your home. In fact, I would say as high as 80% of deals that fall apart are because the buyer chose the wrong lender. So how do you know who's the right lender?
Coming to this week's video blog, glad you made it because I got some great stuff for you today. I want to discuss today the difference between a mortgage broker and a lender. Is there a drastic difference? Is there any difference? Are they the same thing? Mortgage broker and a lender. What does the lender do? The lender works with borrowers and they lend money to the borrower. Borrower walks into the office. Lender says, you want a cup of coffee? Borrower says, fantastic, I'll have a cup of coffee. And they chit chat a little bit. We want you to fill out this application. We want to see W-2s, we want to see your tax statements, all the good stuff. They want to pre-approve the buyer. Lender does a lot of stuff. They're going to process the loan once the buyer is pre-approved. Once the buyer gets it to an escrow, they're gonna manage all the finances when it comes to this borrower. Lender has money to lend. Lender's gonna make the borrower's dreams come true of home ownership. Lenders are good. Where does the mortgage broker come in? What does the mortgage broker do? Here's the major difference. Mortgage broker. Keyword here is broker. Let's shorten that word broker down to what? To broke. They don't lend money because they don't have money. The mortgage broker's job is to find that buyer, that borrower, a lender who does have money. They're also called a TPO, third party originator. All they do is start the loan, collect data, then they hand it off to the lender.
Okay, I like this guy a lot because he says a lot without saying anything. The truth of the matter is there is a huge difference between the type of lender that you choose. They're not all created equal. Banks are different from credit unions. Credit unions are different from mortgage brokers, and mortgage brokers are different from direct lenders. They all bring something to the table, but the question is, how do you choose the right one?
One of the biggest red flags to look out for when you're looking and shopping for a lender. So I actually got 2 calls on this last week, which was the inspiration for this video. So basically what was going on is there's a lender on YouTube that claims he can get you the lowest rate always. Always. He has the lowest, no matter what, rain or shine, he will have the lowest rate. Okay, fun story. So both of these clients, and it's interesting, they both called me on the same week and I found out about this, but so both of these clients, the lender pitched them a rate that was very low. However, he could not lock that rate. No, he could not lock the rate that he had promised until he saw all their documents. And then once he saw all their documents, to one borrower, he's like, well, your debt to income's too high, so I can't give you that rate.
This is actually an enormous problem. But how can you blame anybody? Most home buyers look for a lender based on the lowest rate they can get instead of the best lender that's available to help them get their home.
With the very first thing that you should pay attention to. If you have a lender that's willing to give you a pre-approval letter up front for you to go buy a home, go shopping for a home, without going through the process that we just discussed, where they look at your W-2s, your tax returns, your pay stubs, your money in the bank, maybe they're just going off the conversation that you guys had online, where you were telling them this information, but they never verified it, and then they went ahead and issued you a pre-approval letter to go shopping for a loan. That's a red flag in my opinion. And it's not a red flag because you don't qualify, but it is a red flag because they didn't do the work necessary to determine whether or not you do actually qualify. There's a good chance that all the information you told them is 100% accurate, and they took that at face value and they said, well, that person sounded honest, they told me everything I needed to know. That's good. I'm willing to issue this pre-approval letter. Maybe it's a lack of not wanting to actually do the further work and they're just being lazy in the process and they're willing to issue that pre-approval letter. But for you as a first-time homebuyer, this should be a red flag to you.
Well, there you go. And these are just a few of the problems that people have had when trying to choose the right lender to help them buy their home. A pre-qual letter doesn't mean anything. It just means that the lender has just enough information to say, based on what you've told me, you're pre-approved to get a home. That's like the pre-approvals you get from a credit card company. They don't mean anything until they have all the documentation, meaning your tax returns, your W-2s, your paycheck stubs, or if you're self-employed, your K-1s. They can't even begin the process. So they have no idea what the interest rate's going to be. More importantly, until you find the house that you're going to buy, write an offer and get that offer accepted, the rate process doesn't even begin. And that's why they have what's called a rate lock. Because once you've started the process, the lender's going to ask you, are you comfortable with this rate, whatever it is, 6.1, 6.2, and if you say yes, he's going to say, do you want to lock the rate? And at that point, you're going to have an option. If you lock the rate, then that rate is protected from going up. But if it goes down, it goes down. That's the nature of the business. Banks would go out of business if they kept lowering the rate every time the rates come down. So now you've given all the proper documentation, and you found the house and the purchase agreement, and they've started the process, and you're thinking, I'm good to go. What could go wrong? Everything. Because now that they have started the process, they're going to send the file to the underwriter, whose job it is to make sure that this loan is a sellable loan to the secondary loan market. So now you're going to get barraged with requests for every type of documentation known to mankind. You're going to think that you're giving up your firstborn. You're going to get so sick of redundant requests for documentation that you're going to lose your brain. And it doesn't have to be that way, it's just the way most people do it. So as you can see, finding the right lender is not so simple, but it is super important. So here's my advice. Number one, use a direct lender, always. They're streamlined, they're efficient, and they make your life so much easier. Number two, have your financials in order so that when the underwriter asks you for documentation, it's a snap. Number three, don't buy any major purchases and use your credit during this process. Number four, once you find a direct lender that you're comfortable with, don't get a pre-approval. Get an actual underwritten approval. It's a little bit more work, a little bit more time, but it's absolutely the right way to go because essentially you now have a credit card to buy a house. And lastly but not leastly, once you find a lender who you trust, who's given you a rate that you are comfortable with, stop shopping around because the amount of money that you're going to save is not worth losing your house. Well, that's the video. Thanks for watching. Like the video, leave comments, share and subscribe, and we'll see you next time.